Ladies and gentlemen, K-King here. Welcome to the weekly update. Hope you guys had a good day trading on Friday. Market is down about 2% there. On the S&P, Nasdaq did get hit much harder there. Dow down, semis, also 2000 trend. It's a bloody red day, Banks down 2%, energy 2%, biotech 2%. Healthcare, home builders, retail, emerging market, these guys are all down more than 1%. Looks like only sector that's holding up better is the utilities. And utilities been pretty adamant this entire week while the, these large indices been coming down pretty heavily. We've seen utilities holding up, right? Bitcoin is down about 12% there. Gold, silver miners also got hit, notably miners down about 2% there, but they did make some move last couple weeks, which we're gonna be talking about today. Dollar red slightly, oil green slightly there, treasury bond slightly green also. VIX popped about 12% there. In this weekly update presentation, we're gonna look at long-term implication of this market. We're gonna understand the big picture, the long-term trend of things. We're gonna learn about, is this market ready to see much steeper and bone-jarring, heart-sinking, confidence-crushing correction that might be coming ahead? Or is this the time to buy the dip and look for opportunities, right? We're gonna talk about that. We're gonna cover that in this presentation. We're gonna be sticking with Spider, Qs, gold, and Bitcoin. It is all coming up right now. %9 correction on the S&P 500 here. You can see about 9% correction. This is the first time since 2020, right? Maybe like late 2020 or something like that. First time we're seeing more than 8% correction on the S&P 500. In 2021, the biggest decline we witnessed was 7 or 8%. So right off the bat, in 2022, we start January with the weakness, and you can't really blame the market for this because the market has seen some tremendous rallies since the COVID lows of 2020. So you can see that currently we're retesting this gap area, right? That's the area you can see back in October, right? October 14th, we opened up this up gap. Right, bears been just tearing things apart because there's this gap right here. Fill that gap. There's another gap right here. Just pushing through, thrashing below all these gaps. Right, gaps usually provide cushion, but when there are many gaps, it's gonna slow things down. Though it hasn't slowed anything down. Looking at the daily challenge, this entire week, it's just been going down and down and down and down. And when the market moves like this, everybody panics in fear, right? Even the market is up quite a bit in the last couple of years. And the market doesn't, just so that you know, market doesn't go straight up. That's where we're staying at right here. We closed the day on Friday with weakness. And that tells us there's tremendous amount of fear just within that week period in this trading session that we saw from Monday to Friday. So now we're right on that gap area, right? We've been blowing through all these other gaps. And now we're getting to a little bit of bigger gap right here. This is where I could see some support, some buyers coming in. At the same time, that level, 438 level, is coinciding with that rising uptrend support. You can see that right here, right? July, October, and we're right in that vicinity. And we have that pivot also, prior resistance, acting as potentially a new support, and that's guarding right now at 434, which is the level of the gap fill area. So right now, this entire vicinity is going to act as rather strong support. And also, not to mention, I have my Fibonacci here. You can see measure from this low, right? From that peak, and that's the first level of Fib support there. So we got triple support in this vicinity at 438 and 434, this entire vicinity here, right? Again, we got the rising support, that's the purple. We got the gap area support, and then we have the Fib, right? So we have the triple support. Market came straight down. Bears are tired at this point. I wouldn't be surprised to see a oversold bounce. That does not mean that's going to lead to, you know what I'm saying, all-time highs. Obviously, we need more evidence of that, which we will be looking at this market together next week, every single day. So if we do see a bounce from here, what buyers need to, you can see all my short to mid-term moving average, they're colliding in that vicinity, they're colliding and they're curling down. What we need to see, obviously, this gap needs to be filled. You guys remember when this gap was first opened up? Was it Monday or Friday last week? As long as this down gap stays open, it's gonna make things miserable for the buyers. And that's why when that gap opened up, right? Things got really, really hectic here. So what bulls need to do, kill that momentum by getting up and filling that gap. And that's a long way kind of at this point, 437. And you'll be surprised how quickly that sentiment can change in the market. And you thought this market will never, ever see this kind of decline. Well, market will make sure to surprise you. And that's what market does. This is why it is imperative that you understand the big picture, right? In the short term, there's a lot of fear. But as far as overall trend is concerned, I'm talking like, you know what I mean, primary term, the longer term. Are we still in an uptrend or downtrend? Are we in a down? I'm not talking about short term. I'm not talking about last couple of weeks. I'm talking about, you know, this entire move right here, right? Because it's not like we haven't seen a decline like that before. We've seen that before. And there was that pivot there, as you can see, prior resistance acting as new support. And that was a level, we talked about this, right? You see that? There's that pivot there. You know what? I can just go ahead and do this same thing. Whatever I did right here, I'll just do it right here. Again, this does not mean that it's going to play out exactly the way it did in November. Market is insidiously clever, and history does not repeat a rhyme. So market is probably going to do something different. There's a support, and there's that secondary support, right? And then there was that horizontal support. And let me do a fib right here. So there's a fib, right? So as you can see, and this was what, how much decline was this? This was about 9 to 10%, which is very, very similar to what we're currently witnessing, right? This is about 8, 9, 10. And do you guys remember the sentiment here? Again, this was the pre-election month. There was a lot of uncertainty and jitteriness. You guys remember this? We saw that 10%, we made a new all-time highs. Bulls, why did a lot of people, and again, this was when the market was trading where? 300s, right? You can see that we're trading, we went all the way up to 350s and 330, 320. The market did see that 10% correction right there. And do you guys remember the sentiment? What was everybody been saying at this level? Market is unstable. It went up too fast, too much. We need to see a real correction. The election week is going to destroy this market. All of that, right? And if you remember my analysis, we talked about, okay, well, first of all, let's give benefit of the doubt. Because, and first thing what I said was, hey, you know what, are we in a downtrend or uptrend, right? Overall, Well, looks like we got the higher highs there. Looks like they got the higher lows there. So we have to, I'm not talking about the short term, but in the primary and the long term, right? So we were in an uptrend. We see about 10% correction right here. People are freaking out. But what we have is we got that pivot, the horizontal, and then we got these two supports, as you can see right there, that blue dotted line, right? And obviously nobody knows. I know we don't know how this market is going to behave in this vicinity. We initially bounced, came right back in, and then that was it, right? That was the low. And so then this market went from 320 to where? It went to 320 to 480. And we did not see another correction like this one. 320 to 480. And that correction, 10% correction, we did not see the entire year. Can you imagine that you thought that was the top, right? And you missing out the entire year rally. The spider went from 320 to 480. What am I saying? I'm not saying that's exactly how this market is going to pan out in this vicinity. We're currently experiencing 9% decline. Just like how we look, I want to be fair in my analysis because we're in an overall uptrend. And then we're dealing with my fib here. We got the gap area and these two supports, which is again similar to what we witnessed right here, September, right? September of 2020. And so many people thought there's no way it's going to go any higher, and he did. And one other thing that I kind of realized, I don't always look at volume, but I do like to look at volume when there's a fast declines. People put way too much emphasis on the volume. Here, let me make the volume bigger so you can see it. People put way too much emphasis on this. You can see, you think because we have a rising in volume, that means the downtrend is gonna start. No. A lot of times what happens is the big volume, it usually occurs at the low. That the reason is because this is how you're gonna look at it in a primary uptrend. It's different in a primary downtrend, right? So in a primary uptrend, when you see the spike in selling volume, like this big spike, the unusually high selling volume like this, that tells us that bears are giving it all of its strength. Giving it all. They are pushing it all the way. And when all the sellers are there, all these market participants are scared hitting that exit button, what happens? Oh, that's when the reversal comes. The buyers who know what they're doing accumulate when majority of people are running for cover. This is why market always follows the majority. So I've noticed this high, unusually high volume there. That doesn't mean it's gonna bounce next day or it's gonna reverse right away. But it seems like when that occurs, that what I'm saying. This is that usually and especially that coincides with this pivotal support areas that I just laid down for you guys. The fib, the gap area, that both of the rising uptrend supports and the pivot, along with this spike of selling volume activities, right? So Nasdaq is rather similar. First of all, let's check out those volume right here. There's a big volume spike right here, volume spike right here, volume spike right here, and that's this, and that's that, and that's that. You see these big volume selling volume spikes turns out to be that low. I mean, it's right here too. There's a big volume spikes right there. And look at this big volume spike. The selling volume spike turns out to be that low. Again, that doesn't mean it has to happen this way. Some of you might even, some bears are going to say this time is different. Well, you've been saying, these people have been saying for 2 years straight. So don't listen to these depressed people because they say the same thing. What we have to understand is trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And nobody knows what that means. And that's the reason why everybody missed out this move, right? So you can see, I even hear a lot of people that there's no way it can go higher. It went up too fast. Well, you know what? At the time, Q is trading at 232 and it went to 400 and you missed out the entire thing just because you didn't learn to respect the trend. So let's not make the same mistake here and look at things. First of all, we do have a horizontal support right here. Right? We got some of these support levels. And at the same time, we also have my first level, my Fibonacci here. So it looks like, and you got another secondary support right here and here, right? That blue, that you got the purple dotted and then blue dotted there. My long-term moving average is also residing in that VIS. We got like a triple, quadruple support here. And let me draw this in. And that's that 350 and 340 level. And I believe this is a good level. Keep in mind, you didn't have to pick the perfect low after COVID, even if you got in near the all-time high level right here. And that's when Qs were trading at 232, it went up to 400. That's still pretty nice gains if you knew how to ride this up. And there's chances you could have added more in here and here. Problem with people is unless they can get the perfect low, they missed out the entire move. Not only they missed out the entire move, because they missed out the low, because they missed out getting in that trend, because they're so bored, what they do is they're trying to short their market and then they continue to lose money while the S&P 500 or the Nasdaq or the market makes its move. And every decline, when there's every decline, they all think that's it. That's it. That's it. That's it. The market must have the big crash. My payday is coming. And they burn through hedges, burn through put options, burn through shorts, and realize it is nobody's fault but theirs alone not respecting its trends. I get it. It was a big decline in COVID, during COVID in 2020. But now you look back. What's better? Trying to short this or trying to go long on that? Which is better, ladies and gentlemen? You tell me. What's better? Trying to capture any of the short-term, down move or riding this entirety of that big move? So what was this market doing now that we can see? Now the hands are dealt. Now the hands are opened up. What do we see? Market was bluffing. Market had nothing. Market had nothing. So if people who actually went all in here or called the market's bluff, big payday did come continuously, right? But in the short term, mid-term of things, that's kind of what I see right here. It's very, very suspicious of this market acting so hard, because we haven't seen, and I get it though, entire year 2021 we did not see a real correction on the S&P 500. When we did see a correction, it was short term, it was a lethargic. We didn't see like a straight down move. It was like up and down, up and down, up and down. You know what I mean? It kind of made, the complacency was still kind of in the air. But with that move that we're seeing last couple of weeks here, people are waking up. They're like, what the hell is this going on? Market is down every single day. And that, ladies and gentlemen, I feel like as though this market is trying a little too hard. So let's go to gold here real quick. Hey, we're back. You guys remember when I did this weekly update? I don't know, like what, a month ago or so? Not even a month. This was longer than that. This was like, 2 months ago. Remember what I said, man, life in gold market is tough because it's been in this, it's been bound by, you know what I'm saying? And quarantined, under this is resistance. and not able to get above it. And every single time it's trying to get above it, it has that tankage occurs and things get very, very difficult. We're back here again. One more time. 1, 2, 3, 4, 5, 6 times. Is this the day? Is this the time? Market is ready to make that move. Break out. See, I don't know, but I'll tell you what you need to look forward to if you do want to see this market getting up. What you do need to see is this, right? These are lower highs. Yes, lower highs. What you need to see is this thing first of all making that higher high. Higher high. And then come down to the come up to the resistance. You can maybe go up or, somewhere in that vicinity, come down in this card, cultivate its own higher low, and then establish that uptrend. Until we see that sequences, we still have to categorize this market. I can't quite say in a downtrend overall, right? Why can I not say downtrend overall? Why? Because what's the definition of downtrend? Lower highs and lower lows. Do we have a lower lows? No. Bulls are doing something. We have higher lows. So what does that mean? We got higher lows with the lower high. What does that mean? Market is in consolidational move or phase. Market is building a base. However, this does not mean market can do something like this and resume with this primary term downtrend or in overall or the midterm downtrend. It could do that by breaking below it, making lower low, lower high. So this is really intense here for gold market. Is it going to do this or is it going to do that? Which one is it going to do? I'm leaning more towards to breaking out of this just because in a primary term, you can see we're still in an uptrend and we're kind of basing out. You can even look at this as a heavy, mega bear bull flagging, continuation, resting pattern. We don't know. But at the same time, you must understand that it's never easy. Sometimes when market feels like, when the market feels like it wants to be generous, it will give you very, very smooth breakout. But more often than not, it will play the games. I don't know what it's gonna do. Because when it's been basing out like this too long, so many people are waiting for gold market to either break out to the upside or break down. There will be a lot of head fakes. There will be a lot of shenanigans. Just keep that in mind. Let's go to Bitcoin and end the video with that. So Bitcoin continues to see weakness here, and it all came about when this gap was never filled. You can see right there, it is not a coincidence. It is not a mistake. It is not a random occurrence. When this thing tanked, that gap was never filled, and that's the level where this thing tanked earlier 2021. We're back at that vicinity, and looks like there's a rising pivot right here. You can see from here, here, and that's going right there. And that's a level coinciding with the 123.89. That's a gap area. So now we're back down to the base. That's a neckline. If this is going to be a double top, that if you're a bear and you hate Bitcoin and you want Bitcoin to go to zero, well, that double top needs to be broken, act as resistance, and then boom, right? Lower high and lower low. Right now, what we have is a formation, just a formation of what it looks like a double top. We cannot say it's confirmed until we see establishment of downtrend. Well, if you're one, my, Traders Club membership is now open for enrollment. And if you're wondering about what is K buying, what is K looking at, what kind of options is he buying, what kind of leverage ETF has he bought Friday or this week, or gonna be buying this week? Or what about the value stocks, right? What about commodities? Which one is K buying and preparing to buy? Should there be further decline and further opportunities present itself Well, if you're wondering about that, if you want to come and trade with me and get information and learn about, because if you're sick and tired of trading in and out, burning through hedges and shorts and just letting this market to bully you around, and you want to learn how to position trade and long-term invest. When I say position trade, we're talking 6 to 9 months. When I say long-term invest, I mean long-term investing. And we're talking several years of holding positions. I'm still holding Google since 2019. I bought more obviously during COVID lows in 2020, and Google did like 70%. So if you understand where to look for value, like recently I got into a couple COVID stocks that crashed down. I'm watching some more, which one has a good value to accumulate. Recently got into some options trades on Friday on the indices. And so if you're wondering, okay, which strike price are you buying, which expiration date, how long are you gonna hold, what is the strategy there, all of that, and when are you gonna close, how long are you gonna hold, feel free to check out Traders Club membership at twotradersclub.com. Otherwise, I hope that you guys enjoy the remainder of this weekend. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading next week.